Hey everyone, welcome back to Corporate Decoder, the place where we decode the often complicated world of corporate filings. Today, we're diving into a recent report from Redwood Trust, and let me tell you, it's not just mortgages and real estate investment trusts or REITs. There's a filing about potentially selling more stock, and you know what they say, never look a gift horse in the mouth, but always check its teeth. Well, we're checking Redwood Trust's teeth today, so let's get started. So what's this Form 8K all about? Think of it as a corporate breaking news report. Companies use it to tell investors about significant events that could affect their stock price or business. This particular filing from Redwood Trust is about a couple of things. Scroll date of report, date of earliest event. Reported March 3, 2025/scroll. First, it tells us that the earliest event being reported happened on March 3, 2025. This is important because it tells us when Redwood Trust considered this information to be significant enough to share with investors. Redwood Trust Inc. is a company that invests in mortgages and other real estate-related assets. They're structured as a real estate investment trust, or REIT, which means they have to distribute a large portion of their income to shareholders as dividends. This makes them a popular investment for people seeking income. Redwood Trust has been around for a while. They focus on different areas in the mortgage market. It's important to know what Redwood Trust does because this filing has to do with them potentially selling more stock, and that could impact the value of your investment if you own their shares. Scroll indicate by checkmark whether the registrant is an emerging growth company/scroll. Now let's address a quick formality. The filing asks if Redwood Trust is an emerging growth company. The answer is no. This is relevant because emerging growth companies have different reporting requirements than larger, more established companies. Redwood Trust being a well-established firm means they have to follow stricter rules, giving investors more confidence in the information they receive. Here we see the symbols by which Redwood Trust is traded on the New York Stock Exchange or NYSE. RWT, RWTPRA, RWTN, RWTO, and RWTP. You'll need these if you are trying to find the values of shares for each of the listed equities. Now let's get to the meat of the filing. Okay, here's where things get interesting. This section discusses two key events. First, Redwood Trust filed something called a shelf registration statement with the Securities and Exchange Commission, or SEC. Think of it as them getting permission in advance to sell new shares of stock to the public at some point in the future. This registration statement, filed under number 333 to 285,506, became effective immediately. The fact that it became effective immediately suggests Redwood Trust was eager to have this option available. Scroll pursuant to Rule 424B under the Securities Act of 1933/scroll. Then they filed a prospectus supplement on March 4, 2025. This prospectus supplement relates to their direct stock purchase and dividend reinvestment plan. This plan allows existing shareholders and new investors to buy shares directly from the company and reinvest their dividends to purchase even more shares. Redwood Trust also included legal opinions from Venable LLP and Latham and Watkins LLP about the legality and tax implications of these securities. This is standard practice and provides investors with some reassurance that everything is above board. Finally, the company added a disclaimer that this report is not an offer to sell securities in any state where such a sale would be illegal. This is a standard legal precaution. Now, what does it all mean? Well, Redwood Trust has basically telegraphed that they may sell more shares of their stock in the near future. So the big question becomes why. There could be a number of reasons why they are doing this. Perhaps they want to raise capital to fund new investments, pay down debt, or simply increase their cash reserves. Whatever the reason, selling new shares will dilute the ownership of existing shareholders, which could put downward pressure on the stock price. Now let's put this filing into perspective. Redwood Trust operates in a complex and ever-changing market. Interest rates, housing prices, and overall economic conditions can all significantly impact their business. This ability to issue more stock gives them financial flexibility, the ability to jump on opportunities and manage risks. From a strategic perspective, it is important for Redwood Trust to have financial flexibility. With that, they can quickly respond to changing market conditions. If interest rates rise, for example, they might want to raise capital to buy existing mortgages at a discount. Or if the economy slows down, they might want to increase their cash reserves to weather the storm. So, what's my take on Redwood Trust after reviewing this filing? On the one hand, their ability to issue more stock provides them with valuable financial flexibility. This could allow them to capitalize on opportunities and manage risks more effectively. On the other hand, it also suggests they may see challenges on the horizon. They may be preparing for a downturn in the mortgage market or a need to deleverage their balance sheet. Overall, I think Redwood Trust is a well-managed company with a solid track record. However, their reliance on the mortgage market makes them vulnerable to economic fluctuations. I would say that Redwood Trust stock is a reasonable investment, but you should be aware of the risks involved. Do your research and consider your own risk tolerance before investing. Thanks for watching. If you found this corporate decoder helpful, please like, comment, and subscribe for more deep dives into the world of SEC filings and corporate shenanigans. Until next time, stay informed and invest wisely.